If you're waiting to buy and jump into the real estate market until interest rates hit 5% or less, let me show you why that wait may cost you quite a bit of money. Now, I want to be clear, this is not one of those buy now or miss out messages. What this really is before you make that decision, let's run the numbers and make sure it's the best decision for you. So let's start with a little bit of historical context because I think it's vitally important to truly understand what's really going on in the market today. So most buyers' frame of reference right now, when they're looking at mortgage rates, is what they saw in 2020, 2021, 2022, when rates were hovering around 3%. I mean, I personally know people who got rates less than that, around 2.75%. So when you look at today's market rates, which as of today, when I'm filming this video, is around 6.7%, I mean, that is a drastic difference. I mean, 3% to 6.7%, it can feel like, gosh, we're way overpaying for this rate. But when you look historically, and let's go back to 1990. If you go back to 1990 to today, the average mortgage rate between that time is about 6.2%. So in the last 30, 40 years, where we are now is about average. If you go back even further to 1971, the average mortgage rate has been 7.7%. So when you really take it into context, the average the average mortgage rate of today is average of what it has been for the last 30, 40 years. And I think it's also important to make the distinction that mortgage rates are not correlated with the federal interest rates. So if you hear in the news about the Fed cutting rates, that doesn't have any direct effect on mortgage rates. Mortgage rates actually follow the 10-year Treasury note. So if you really want to have a better understanding of what's going on with mortgage rates, follow the 10-year Treasury. So let's look at an example to maybe put this in a little bit more better context. So there's going to be some numbers involved here. So if you're not a math person, that's okay. Just follow along. I'm going to try to make this as simple as possible. So let's say you find the absolute perfect home, and I'm going to make these numbers a little bit easier for the math. So let's say that home that we found is absolutely perfect is $500,000, and we have 20% to put down on that house. So in our example, a $500,000 house minus our 20% down payment gives us a total loan amount of $400,000. Now, today's rates are about 6.7, but I'm going to use 6.5 for my example. So at a $400,000 loan amount at a 6.5% interest rate, our principal and interest payment per month is going to be $2,528. But let's say we decide to wait a year and rates do drop to about 6.25. So now we've got a rate of 6.25%, which is fantastic. Now, one thing that a lot of buyers maybe forget about is during that year that we waited, that home price is likely going to appreciate. So I'm going to use our average appreciation across the nation, which is about 3%. So our $400,000 loan is now $412,000. But we do have a slightly lower interest rate at 6.25%. So what does that make our principal and interest? It actually went up just a little bit to $2,537. So let's say we wait another year. So now we're 24 months from today. We've appreciated another 3% potentially, but rates drop a full another 0.5% or 0.25%, excuse me, to 6%. So what does that look like? Well, based on that new 3% appreciation, our loan amount is now going to be $424,000, but we do have that 6% interest rate. So that makes our payment $2,544. So I don't want it to get misconstrued that I'm not saying that interest rates are not important, because they are vitally, vitally important. What I am saying is modest rate reductions can be easily offset by appreciation. Now, I use 3% as an example here, but Wichita has actually been outpacing that a little bit. So I might be a little bit more conservative on those appreciation numbers. So when we're thinking about waiting, although your payments may go up slightly or maybe down slightly, depending on how much that rate changes, what you really have to decide for yourself is that potential savings or maybe paying a little bit more worth what we would have lost in appreciation? And here's the other thing to consider as well. If rates were to swing significantly after you purchased, you still have the option of refinancing. And in that example, that's a really big benefit because now you can take advantage of the lower rate and you still got the appreciation from when you purchased the home. So, what does all of this really mean for you? Well, so most economists of today are really projecting rates to stay about the same throughout the remaining of 2026, with potentially some slight easing into 2027. But it's anybody's guess, to be honest with you. They've projected reductions over the last several years, and we just haven't seen big swings. We've seen small reductions over some time that got us from 8% from a year and a half to 2 years ago to the mid sixes now. But we're not seeing any major swings coming up anytime soon. And as a reminder, I did use 3% as an appreciation number. And in Wichita, in the metro area, we have seen us outpace that just a little bit. So those appreciation numbers may be a little bit more conservative what I use. And so just take that into account. But again, just as I referenced at the very beginning, this is not you better buy now or you're going to miss out type of message. What this really is about is just giving a general understanding of what the market has shown us in the past over a long period of time, in a short period of time. And don't forget that appreciation number because that is a real thing. And missed appreciation is one of the biggest costs that most homebuyers mistakenly miss out on. So in an attempt to save a couple $100s a month, you may miss out on tens of thousands of dollars of appreciation over that time. So that's really what it's about to make a better decision and a more informed decision for yourself. If you want to see the actual numbers of maybe a house that you're really interested in, let's have a conversation about it. My contact information is in the link below. And again, it's just a conversation, not a sales pitch. This is really about you to make an informed decision. No obligation. Let's talk. I hope you enjoyed this video. And again, if this information has been helpful, please subscribe so that you get updated on any future videos. We'll talk to you soon.